Okay, I think this is working. It's my first time live streaming, so please bear with me. I'm just getting someone to test out for me to see if they're seeing me and see if it's working. Please bear with me. As you know, it's my first time streaming, so just give me a couple secs. Let's see if I have anyone else on right now. Great. Okay, awesome. Ali, nice to see you. So it's my first time doing live stream. I've been away for a bit of time, but I just thought I would try to do something consistent and something that saves me a little bit of time, just because there's a lot of time going to the content creation I'm not an expert on. So that's why I decided to just try this out and just do a live stream where you kind of could ask questions and I could just kind of answer and kind of tell you kind of the things I'm looking at, the stocks I'm looking at. Hey, King Kang, nice to see you. Thanks for joining. So my first live show. So before I start, I just want to have a disclaimer. So I'm not a financial advisor. I'm just this is just purely for purely for educational purpose, or entertainment purpose. If you want to buy any of the stocks, please just decide on your own and kind of do your due diligence and consult a financial advisor. I'm not one, like I said earlier. I do have, this is just my kind of my hobby. I enjoy looking at stocks, I kind of look for ways to kind of grow my wealth. And I got interested in investing about 6 years ago, and then I never looked back. I really enjoy picking the right companies. I started off with ETFs. Just a little background about me. I started with ETFs and kind of built my portfolio, and then I started buying individual stocks, looking at financial statements, analysis, and etc. I do have a background in accounting and finance, so that's something I enjoy doing on a daily basis. I love to follow the markets. I like to follow companies I'm interested in. So let's start. So I'm just gonna provide one of the first things I want to do is just provide. I think my channel kind of grew when I started talking about SPACs. Special purpose acquisition company. So I'm gonna start just to talk a little bit about my SPAC position holdings, what I've got out, what I've got in, and what I think about each of them. Okay, great. Okay, so the first one I want to talk about is one that kind of got me a lot of views, and that's Hyliion. If you guys don't know, you guys could watch my previous videos on Hyliion. I started covering it very, very early. I think I started covering once they announced the merger with, at that time, as SHLL. I think around probably end of June, or maybe June 22nd. So then I kind of looked at it, and at that time, SPACs were getting more and more popular and more excited. So then I kind of looked into it. I liked the business. I liked what they were doing. I watched a lot of the videos from interviews with the CEO. So Thomas Healy, for those who don't know. So I got in pretty early, and then I kind of watched it go up. I bought it around right after the announcement, and it kind of ran up very quickly, like you can see here, up to $30. I didn't sell right at the 31, but I sold it just below 30, around 28, 29. I sold, I guess, half my position. And then I saw it kind of run down, and then I kind of held on, and I bought more around the $20 level. And then I just kind of saw it ran up very quickly. And then, I did some valuation analysis. I liked it around 20 and kind of saw it all ran up all the way to the 50s, 55 at its highest. I started selling and trimming around this, like around right here, and then when it came back, kind of went up to here. And from a valuation standpoint, it just didn't really make sense for me to hold anymore. So I kind of sold most of my position around, I forgot when, but around this area, And then right when after they merged, it kind of started tanking. I kind of one other one that kind of merged before Hyliion did was Graph or Velodyne. I've also covered that in a previous video. I'll talk a little bit about that one right after. So I kind of, because of that one, I kind of thought, I saw kind of how quickly it fell. So when it started falling around 35 is, or maybe not 30, yeah, around right here is when I sold the remaining. So now it's back to $19. Thinking back, do I want to get back in? I like the business, I like what they're doing, but it's just so small right now. And I think they were delivering 20 units. I know they're going to grow very, very quickly. So for me, I kind of want this kind of show me story, kind of like show me that you're doing what you're telling the investor that you would be doing. I might get back in later, but as of now, because I just have a bit too much SPACs than I would like, so I got out of this one. So another one I wanted to talk about was Velodyne. I think it's VLDR. Before I go to that one, okay, so I got a question from Angeline. Hey, Jadim, nice to see you. I know it's been a long time. Jadim is a guy that I kind of follow. I kind of watch his videos. He talks about a lot about SPACs too. So check out his channel if you haven't got a chance. What do you think the lowest price for Hyliion can hit? I mean, I really don't know. I don't really have a price target. I mean, I think $20 is reasonable. I have thought about getting back in around $20, but because there's just so many other SPACs and other maybe more established businesses that I'd rather be in those than go back on Hyliion. But having said that, I would continue to monitor Hyliion and kind of see what the CEO is doing and how they're kind of managing the business. And I may get back into it, I'm not sure yet. So the next one I want to talk about is Velodyne. So this one I talked about pretty early as well. I think it was, I remember it shoot up right off. Yeah, I think it shoot up to 14. I'm informed this correctly. I think so. I remember it shoot up to like 20 something dollars. I think that's when I started covering it. I remember that they were the one that was supposed to merge with I think Pure Cycle, and then all of a sudden that Pure Cycle's discussion went nowhere, and then they kind of came out and say they would be merging with Velodyne. So I think that's why you saw some movement, and then I think Velodyne hit right here, and it went to $20. That's when I started covering it. At that time, I did not own a position. So because I think $20 is a bit expensive. Again, with these SPACs, usually the price they start off is $10, and then they could go, because that's the redemption value, kind of like, for those that don't know, SPACs is kind of like these investors put money into this trust, and their goal is to find a company to merge with to bring public. And then those shares that we could redeem at that time, any time is $20 pre-merger. So when you see it hit $20, and these SPAC valuations usually use a $10 valuation. So when you look at $20, that means their valuation that they kind of calculated or assumed is double. So at that $20, I didn't buy any, so I kind of just waited patiently. And then I started averaging in around, starting my position probably around the 16s, and they came down to like the 14s. And I know it went to 13. I bought some around 13. I think I had average cost about $14 or something. And then again, similar with all the other SPACs, it kind of just ran up very quickly, and it went to $30. I didn't sell at $30. It kind of came back down. I was like, oh, should I get out? I still hung on because I wanted to wait till the merger. So luckily, it kind of bounced back up around 24. I think the merger is around right here. So on the very, very next day, on the first day of the merger, I saw it started tanking. Then I got nervous and I said, I'm happy with my returns, and I got out. And then, the rest is history. You can see what happened after. Now, do I want to get back in? I mean, I like their business, what they're doing. And I covered in the past. Just right now, again, because there's so many SPACs, I'll be talking a little bit more about other SPACs I'm looking at. So as of now, I probably won't be getting into it. It's down 5% today. Next one I'll talk about is Tattoo Chef. But before I go there, I'm going to just see if there's any questions. ChargePoint. I'll be talking about that one a little bit later. Yeah, Elon doesn't like LiDAR. Although like Google Wemo uses LiDAR. I think it's an interesting kind of technology, but yeah, I mean, Elon did say that it's garbage. All right, let's see. Tattoo Chef. Okay, this one again, I cover this. I think yeah, I got my popularity from SPACs. So this one, I covered right off. I within the first week they announced the merger. I don't remember when. Probably if this is probably the first SPAC I covered. I think I started talking about right here. I saw the business. This is actually a really interesting business. They're food plant-based company. And what really excited me was looking at the revenue growth. They're like growing 100%. Like, I mean, when a company grows 100%, you kind of get, I kind of get excited, like, whoa, whoa. And not only that, this previous year, though, at least the historical financial statements show that they had a net income. So you're like a small company. When you're growing very fast, a lot of times you don't have net income because you run to incurring additional sales and administrative expenses, general. So a lot of expenses. So when I saw that, I was very excited. So, and I kind of did the valuation with Beyond Me, and I thought this was trading significantly less than Beyond Me. So then I thought, even at half the valuation, it was still below what Beyond Me was trading at. So I got in around here, I think maybe 13s and the 14s, around $14. I think I bought more around here. It had the huge run up, and then this one I forgot. I think it emerged around here maybe, and so again, these SPACs kind of trade the same way. When they fall, they all kind of fall. So you saw earlier where the Velodyne kind of fell, and then I sold half because this one I kind of sold half because before the merger, because after I saw Hyliion and Graph or Velodyne, I kind of got nervous. I'm like, well, I'm gonna sell half of it just because I don't want to stay in and then lose my profit that I had. And there's never anything wrong with taking profits. I always try my best to think, would I still want to hang on at that certain valuation, even though I think it's still cheap relatively, and I really like the business. So I didn't know which way it was going to trade, so I decided to sell half and buy back later. So I just saw like it started coming down after it merged. I think the first day it went up, and then it started going down. I bought in back around the 20s and even like the 17s, and I think I had back some around the 16s. So I had a pretty sizable position until a short report that came out. Justin at a couple of cents. I watch his weekly live show as well. He and basically I also read the short report myself, and the short report was, it had some merit to it. I think they kind of like had more capability of doing their research, and kind of one of the concern was customer concentration. It's saying that how it was only in Sam's Club and not. It was kind of difficult for them to kind of go into other retailers. So and there was some get some facts that they kind of got through. Like, I forgot what it was, but anyways, it was a short report. I kind of read through it and kind of agreed on some of the points, and so I decided to sell half of it, and then use the other half of the money and bought Beyond Me because I really like the space that they're in. So when I got out of Tattoo Chef, I kind of wanted to have that exposure, so I got into Beyond Me. On that same day, I pretty much sold the money and used the money to buy Beyond Me. Also, I have another company. They're very good food company. It's a Canadian company. They also are plant-based food company. So those are my kind of play. Well, they're all very small positions for me, just to play that sector because I do like that sector. Looking forward. So that's what happened. Let me see if there's any questions. Like, how do I usually calculate valuation on a company? Like, I look at it depends. Look at the revenue, look at the gross profit or multiple, or look at their net income or EBITDA multiples. A lot of times a lot of the investor presentations will have that detail. You might want to check if it's accurate though, but I will be going through maybe a couple of investor presentation just to kind of talk about a company that I'm looking at just in a little bit. Okay. Yeah, so those are the three that I mainly talked around my channel that I got it out of. The ones I do own are IPOB. That's the Chamath merging with Open Door, which is in the iBuying real estate kind of business. I like that sector. I bought it. This was pre-merger announcement. I mean, I thought I mean Chamath is the one that brought Virgin Galactic, which I also cover in my channel. I just thought he's a very smart guy. I follow him. He used to work for Facebook. Very smart guy, very great capital allocator, very smart guy. So I got in very early because I just really believed in him. And honestly, there's not much downside. I mean, instead of just kind of like when you're buying close to $10 is. So I kind of saw like risk reward. I just thought maybe it's a good idea. Just puts a little bit of money there. So that one I still hold. I really like it. Fiat I covered my channel. That's merging with Skills. They had a pop like recently, just last couple of days or yesterday at least. I think there's an announcement that they're probably gonna merge in mid-December. That one, it wasn't performing as well as I wanted to. They are also the ones that brought DraftKings in, so to the public. So you can see how well DraftKings has done. So I looked at the numbers. I like the numbers. I like the growth. They're not they don't have positive earnings yet, but I mean they're growing. I think again 100% or something like that. And the projections were pretty maybe a little bit aggressive, but a lot of these companies are kind of on the investor presentation. It seems aggressive, I guess, but I mean I like what they're doing because their margins are really really high. If you look, I forget, it was something like 90% or something like that. So I like Fiat, but it just wasn't performing as well as I would hope. I liked. So I started trimming my position. I sold some yesterday. I'm planning to sell some more. I haven't really decided if I'm gonna hold any. And also, again, with these mergers, it seems like right after the merger they kind of get dumped, I guess. So I just kind of want to be careful with that. I can always buy back later if I really like the business. And with ChargePoint, this one has gone up a lot. I think it was up over 200% at one point, for me at least. And I think my first post on YouTube was on SB, which is merging with ChargePoint. I really like, ChargePoint is the electric chargers that are all over in the US and expanding into Europe and etc. I really like their business. I mean, if you believe in the EV industry, and a lot of people will be driving electric vehicles, there will be a demand for their charging stations for sure. So there was a lot of excitement around this merger. And I got in, I think around 12 something, around $12. It ran up a lot, and especially with the whole EV stocks. I'm gonna be talking about a little bit of EV stocks later, but with XPENG, Nio, Lee, Blink, SPE, they all just have gone up like crazy. Look, I'll show you. Sorry, I should have maybe put the stock up, but like you see how crazy it is. Like this run up, this from here to like the high, it's 88% in what, like 17th to 24th, 25th. That's in 1 week. So I like it around here, but when I saw it went up this much, I started selling the last couple weeks. It just the valuation at like 3 times the initial valuation of what they were calculated at. It's just a bit too rich. And again, with these SPACs, I'm kind of worried about whether they're gonna come back down after post merger. So I've been trimming, and it was a really really big position for me. It was like probably my largest SPAC at one point. But now it's coming down to a very small position. Okay, I'm gonna see if there's any comments and questions. Okay, I'm gonna continue. So I talked about Hyliion, Velodyne, Tattoo Chef. Okay, so the most recent one that I got into is actually NGA merging with Lion Electric. I could pull up their investor presentation just to kind of walk you through kind of what I saw. In this one, it's trading at $14 or $13 now, but hope you guys are seeing this. Yeah, you guys are seeing this. Yeah, so they just announced it 2 days ago or yesterday morning. So this is their investor presentation. So a lot of times with these SPACs, they go through a different route. So these private company goes through a different route when merging with a special purpose acquisition company. So a lot of times the information is not as rigid as a normal IPO would go through. They would have to file their S1, which has significantly a lot more information, or generally more, I guess, audited or like numbers that I guess is more information. I'll show you a S1 or close to the S1. It's F1, but I'll tell you that a little bit later about a company that I see a lot of potential in. So I just kind of look through, who the CEO, the management team is, and kind of what they've done. They're another electric company, electric vehicle company. They make, I think they call it Lion numbers. But yeah, one of the things I really liked was they have some really good big key customers like Amazon, CN, or CNR. They're partnering with some really big companies. This is their history, like what happened during the last 12 years. So they've gone pretty far away. About them building a new facility. Oh yeah, here's their current vehicle. So they're in the medium and heavy duty urban trucks. So they are kind of competing with the semis. So like Tesla, Hyliion, or Nikola. Although I don't want to talk that, I'll leave that for another day, anyways. Yeah, so they have got pretty big customers, and they're already building vehicles. They're already building buses and trucks. So a lot of times, like I always look at, well, I'd rather have a business that's already kind of running already rather than a pre-revenue kind of company. And although the revenues are really small currently, but at least they're still like they're delivering and they're making vehicles. So one of the things I like about it, I mean, with all these SPACs, I also want to tell you guys to be careful. Like I have a very small position in these like speculative plays. Those are like speculative plays for me. It was just kind of more fun, more interesting, new companies. But those are not my core positions. I think core positions are those bigger companies that are trading at reasonable valuations with good growth. And like when I listed my top 7 stocks holdings, I talked some about those ones that I really like long term as a core position. So these aren't core positions. These are more like, yeah, do I believe in their business? Do I believe their valuations? Do I believe their future? And then just kind of a little bit, and I just initiated the position. I haven't finished playing out or buying my whole position yet. I mean, these are very speculative. Multi-year purchase agreement for the purchase of up to 2,500 Line 6 and Line 8 trucks at customer's discretion. See, I mean, a lot of times also with these orders, I said this in another video, but if they cancel, they're gonna lose the orders. Sometimes it could happen. So it could really hurt the company's future, and especially these bigger orders from these bigger companies. Just want to get to the valuation. These are just some strategic initiatives, what they're doing. I don't want to spend the whole video or whole live stream just going for it. So I just, I spent some time looking through it. And also, so right now, the pro forma equity value is about 2 billion. The pro forma enterprise value, which just strips out the cash and debt, is about 1.5 billion. So when they're trading at $14 or $13, that means they're paying a premium like of $30. So the valuation is really just times or grossed it up by 30% if it's $13. So it's about 2 billion. I mean, it's not outrageous when you look at the other companies, I guess. So the closer to 10, the safer you are when you're buying these SPACs. So it is a projection. So I looked at this and I think I'd be a little bit aggressive. I mean, you're looking at, I'm not saying they can't do it. Maybe they would be able to. Like they're only estimating to have 2 trucks and 108 buses sales. So I mean, they're already selling buses and trucks, but not a lot. But you can see the growth, the total units of sale from 491% next year, 281%. Those look great. Again, those are only projections, and they could be wrong. And it's funny because I was looking at Virgin Galactic's investor presentation and looking at how they're doing. It's not exactly the same. But anyways, that's another story. They look to be cash flow positive in 2023. So it's not very far away. Like looking at QuantumScape, I think it was revenue in the 6th year or something like that. So this is pretty, they're already making revenue. Cash flow positive expected to be 2023. Reasonable R&D, good revenue, positive EBITDA even starting next year, 2021, which if they could achieve that, I think it's great. So, I mean, that's why I have a little bit. I mean, and I'll slowly add. I mean, if it comes back to the 12s, I'll probably add a little bit. If it comes to the 11s, if it ever does, I'll probably add a little bit. Again, this is speculative play. So there's some of the valuation based on like 2024 revenue. So this is pretty far out. So they kind of look at 2024 revenue, at what price they're trading at. And you can see right here. So the blue is the announcement date, what they're trading at, and then this is what they're trading at currently. So you can see the valuation, what they said they would trade at or should trade at, and then they usually just all gone up. So a lot of these are SPACs actually, like Nikola, XFleet, or XL Fleet, Hyliion, Arrival, ChargePoint, Canoe. I talked a lot about these, Fisker, Lordstown. I like Lordstown more than Fisker. I don't know if I said that in a video, but I didn't get on Lordstown. I think I missed it. I mean, I did miss it, but it's okay. You can't get on everything. I mean, and again, like Lordstown, it's also like pre-revenue. You kind of like have to have that kind of expectation of them being able to, deliver on the promises. So I always prefer that a business that actually is an established business already, or somewhat established, have revenues or whatnot. So that's why I like FIAC or IPOB and etc. And so I just kind of look at that, and I just thought it's an okay speculative play in the shorter term, especially with a lot of excitement in the EV industry. Now, not all SPACs will go up. Some SPACs come down or do not much, although lately it's been kind of going crazy. But yeah, so this one is interesting. I'm still kind of doing my due diligence. I bought a little bit. I might buy a little bit more. I haven't decided yet. I'm probably still going to look at it. So that's for what I'm looking at. Let me see if there's any questions. Nio falling. That was one of the things I want to talk about too. Oh, before I go to that one, another one I'm not in yet, but I really like is Longview, which is merging with Butterfly Networks. I just gotta briefly talk about it. Let me just pull it up. What is it? Longview stock. Okay, this one. Maybe I should go with Butterfly. So this one was just announced, I think, last week. I was looking at it, and then when I wanted to buy it a little bit, it was after the market closed, and then I just missed the cutoff for after hours buying. Could have got it in the $12. So this one is a kind of like a device that does ultrasound. If you look at their investor presentation, it looks pretty cool. I mean, I have some I see some risk because they have some competitors, but valuation wise, what they're doing is kind of like allowing easier for people to kind of look at the hard or just your internals easier and through a handheld device versus like a big equipment. So that one's an interesting one to keep an eye on. That one, I'm just waiting for it to come back down a little bit before I get in. I may never be able to get in, which I'm fine. I mean, I can't, like I said, I can't be in everything. And then I only have a certain part of my portfolio in speculative plays. I don't want to be too big. So that's one I wanted to bring up just to keep an eye on. And if you could probably just Google like Butterfly Network investor presentation just to go over that. I think that's a good idea if you're interested in that one. So Nio update. So Nio, I talked about this stock at $7 and I got in around $7. Like I initially bought it, like I averaged up a little bit, but it was doing the right things. I mean, it's already gone up so much already. Like I think it was $1 before, $2, and then it ran up to $7, right? So it was this more than 6 months ago, but like, at one point it was like $3, $2. I didn't get in, and then a friend of mine kind of brought it up. I should look at it. So I looked at it, and then I liked it. They were doing the right thing. They have record deliveries. They're in the right industry. China's big on EVs. And I think it was trading very reasonable compared to Tesla at that time, at least. So I started buying, I think just under $7, around $7. And then I sold some. I think I ran it way too fast. I sold some and I bought some back around here. And then I think I held it, and then it kind of ran up here. Then I sold some, and then I bought some. Anyways, and then just this ran up, and then I'm like, oh no, like this is way too much. I think like, yeah, I mean it's great what you're doing, especially with their battery as a service. They came out with the news about that. I'm like, this is great. And then they came out with the record, I think over 5,000 the first time last month, and then it just kind of, you're seeing 20%, 30% a day, and it's great for me. But as a long-term investor now, I'm like, well, the valuation just gone way ahead of itself, and well, that's at least how I felt. So I started trimming. So I still have a big position just because of how much it grew, but I already sold like my initial cost. So like it's really all house money. Even though it's all house money, I don't want to lose it, right? So I still continue to trim as I saw fit. I mean, I do like this long term. I'm planning to hold still a big position going forward, but I do see some volatility going forward. I don't know how long. Like we saw that this past week, like down 10% today, which was kind of rough because it was my largest position. But again, like I still have it is a large position, but it's not like I don't have like 20% in one stock or anything like that. I have a pretty well diversified portfolio. So even though I took a hit today, I was still pretty happy. I mean, like after it ran so much, right? So I would say be careful with it. I like it. Let's do like a valuation analysis. Like I was just about to do. Like here, I'm just like looking at Tesla, Nio, XPENG, and Li Auto, which like you saw how much these kind of ran, right? So let's do it this way. So I'm just looking at Tesla. Okay, so it's 554 billion. Okay, so 554 billion. And you guys can follow along if you guys. 554 billion. So this is millions. Looking at their sales, I'm just gonna say what are they trading at price to sales. So they're expected next year about 44.8 billion, right? Am I doing this right? 44.8. So this would be your price to sales. To 2022 sales, I think, right? So, oh wait, this is 44.8. So I gotta, am I doing this right? 44.8, sorry guys, 1 second. 554. Let's do this. 554. 44.8. Okay, that looks more makes sense. So it's trading at price to sales 2022 sales of 12.3. Okay, let's see like the growth rate. So the growth rate about 45%. Okay, we should put 45. So about 0.27 the price to sales to growth. Okay, the lower the number, the better, the more reasonable it is, right? So I'm just comparing Tesla with Nio. By the way, I think they're all kind of ran up. So I think a few weeks ago I said when Nio was, I don't know, 50 or something like that, I'm like, and Tesla was at 400 and something, I said, I'd rather buy Tesla because the valuation was cheaper than Nio. Like, I mean, I liked Nio before because it was cheaper than Tesla, but then Nio kind of just caught up and ran ahead of like Tesla. And then I might as well just hold Tesla. Or I do hold Tesla, I might as well buy more Tesla instead of Nio because if I wanted to buy more in that industry at least, because it was trading cheaper than Nio. And Tesla is also have positive earnings and a good gross profit compared to Nio. Okay, yeah. So let's look at Nio now. So 61 billion. 61 billion, 4.87 billion, 104%. 4.87. I mean, they're trading about the same sales. Okay, now it's funny because now I think it's 101%. Yeah, it's interesting now because like before, a few weeks before, Tesla was trading better. Price to sales, price to 2022 sales. It still does trade a little bit better, but I guess growth rate for Tesla is only 45% versus Nio 101%. So if you're looking at price to sales, yeah, maybe Nio is cheaper now based also on growth as well. So let's look at XPENG. $37 billion, 37. Let's go put 38. That's crazy, 156%. I guess smaller companies is easier to grow, so. Oops. Yeah, you can see price to sales is trading a lot more expensive than the other two. But I mean, their growth is what, 159 or something? What is it? Yeah, 159%. I guess if you take growth into consideration, it's about the same as Nio. I mean, but growth, like, I don't know how much you base on the number, but I mean, I think, I mean, I like this industry, but even though you're trading at what, 17 times 2022 sales, that's pretty expensive. I mean, yeah, good growth rate, but you have to grow into it, in my opinion. But I mean, I'm not buying this industry right now. I do think this is the future, like electric vehicles is the future, longer term. But in the short term, I'd rather wait a bit than to decide. I'm almost there, 2.62 and 96. Wait, this makes more than Lee. Yeah, Lee makes more than XPENG. I actually was surprised. 100. What is it? 96. These all these are going pretty fast. Yeah, I mean they're all Nio, XPEV, and Leo all trade around the same. But I mean, you look at price to sales to growth. Yeah, XPEV is probably a better bet. But these are just numbers. I mean, that's not everything. You got to look at the companies and what they're doing and their story. Like Nio with their battery as a service, I really like what they're doing there. Tesla is dominant in the US and growing in China. So I like Tesla, but I'm not adding now. I like Tesla and Nio. Like I rather just own those two. I'm happy with it. But I'm not buying at today's price. You know, it might go up a lot more, but I'm happy with my position. I don't want to add to my position. That's what I'll say for now. Let's see. Oh, sorry. I enlarged my Excel. How to do this now? View. Sorry, is this better? Sorry about that, I didn't realize. Let me even bigger. So what I'm just trying to say here is, if you had to choose one, I would still choose Tesla. Yes, it's not as growing as faster as Nio, but it's, in my opinion, it's safer than Nio, and Nio has gone up a lot. Like initially I bought Nio because it was significantly cheaper than Tesla, but you could see it's gone up like, I don't know, I bought it around $7, about $50, so about 7 times since I bought it. So yeah, that's how much cheaper they were trading at. I mean, it comes with risk, right? I mean, there's a reason they were trading at that. They were near bankruptcy last year. Like, that's why I was trading at $1, $2 last year. But who would have known, right? But they were improving as, like I think I did in June. Like you can see that their numbers are improving. They released delivery sales, and Nio actually just today released their numbers. I think I'll show you 1 second. See, I think I saw it here. Nio provides November 20. These are pretty good numbers. 109%. Again, 5,291 vehicles delivered in November. That's great numbers. But the stock came down. Why? Because it's gone ahead of itself, and now even with great numbers, and the expectation is even higher because the stock has run up even like significantly since last month. So I mean, I think it's good to be an EV, but I think take your time, buy the right ones. If there's any significant pullback, I think it'd be good to buy Tesla or Nio for long-term. XPEV, I think, for me, I think it's in this order. I think I like Tesla, Nio, then XPENG, then Li. For the business that I mean, I have to dig more deeply into these two, but from a brief look at it, I like XPEV more. I think probably as the growth rate, expectation of the growth rate. But yeah, I'll leave it at that. Yeah, so I mean, a lot of these companies, delisting of China-owned corporate companies, and then there's discussions about also the accounting standards, making sure that they also comply with the U.S. standards. There is the discussion. I mean, there's risk, of course, with any investment has a risk. You just kind of have to assess how likely and how much do you want to bear with that risk. How likely will it be, right? I mean. I do have some other Chinese companies, like I think Alibaba, like it's one of my larger positions. Tencent, they're all big China companies. I don't foresee them going bankrupt. I mean, if they delist, I don't know about delisting, but changing accounting standards shouldn't be a problem for them. But it's a risk that I'm willing to take. But if you look at the growth number, the valuation it's excellent growth with excellent valuation on those. And they're trading at a discount to the US like mega caps, probably for that reason. Let's see. So what's the next thing I want to talk about? Oh wow, it's already like 45 minutes already in. You know what? Okay. I was planning to do this for an hour. Maybe I'll stay a little bit longer, because I want to make sure I cover everything I want to talk about. Okay, so King Kang, I don't know if King Kang is still here, but King Kang kind of suggested this company that I've never heard of. It's Qrate. So let's look at it. Qrate. Qurate Retail Inc. So I've actually never really heard of this company, to be honest, before I started looking at it a little bit. If you guys will have questions for me, I will be posting a post probably in the next couple of days. If you have any questions you want me or companies you would like me to cover, I'll answer them in the live show. For example, King Kang has kindly asked about this company I've never heard of, so I just kind of looked into it, and I will talk about it during the live show. So let's look at what they do. Okay, so Qurate Retail, through its subsidiaries engaged in the video and online commerce industries in North America, Europe, and Asia. The company markets and sells various consumer products primarily through television programs, websites, and mobile applications to approximately 380 million households worldwide. It also operates an online retailer offering women's, children's, and men's apparel and other products such as home beauty products through its desktop and mobile websites. Mobile application under the name Zulily. The company was formerly known as Liberty Interactive Corporation, changed its name in 2018. So it sounds like a commerce business, like selling or advertisement for, I guess, companies, and they actually have their own, I guess, offerings as well. I usually go into their website also, but before I go there, like, one of the first things I like to do when I look at companies is look at the value. I look at first. I kind of look at their income statement. I hope this is big enough. I don't know. So like first thing I kind of look at, there is the revenue is growing. I mean, it generally, like if you're looking at 10, 13, 12, a little bit decline. I mean, it doesn't look like it's growing a lot, right? So you kind of would expect a reasonable valuation. A lot of growth companies, premium is priced in. So, okay revenues, profit margins, year-over-year profit, gross profit, stable general and administrative expenses. So it looks fine from that perspective. Look at the balance sheet. This most recent, 1 million in cash and short-term investments. Let's look at debt. Intangibles, that's probably their online stuff. Current portion of debt is 1.6 billion already. Total current is 4 billion versus 4.3. So current ratio, which is current assets over current liabilities, is okay. One thing that was concerning was the long-term debt. So they have 6.4 billion of debt. So my worry is cash flow. So then next thing is I look at is cash flow after looking at the balance sheet. So you can see that cash from operations, it's positive. Like the last, so this is each column is the 12 months, last 12 months. So you're talking about last 12 months of September 2017. This is last 12 months of September 2020. So this is annual, but for the last 12 months. So you can see that cash flow from operations is pretty green, pretty good, like 2 billion, 1 billion. So it's pretty solid. So it doesn't seem like it's going to be a concern on the large debt. But I mean, things can happen if the business deteriorates and don't have the cash flow from operations. It could struggle. And like the next thing I kind of look at is multiples and trade. Like what does it trade at? They don't have much information here. Oh no, wait. Yeah, I'm not sure why it's not showing the 2018 numbers, but when you're talking about EV to sales 0.6, it's very cheap. But I guess it comes with like, let's look at the growth rate. Let me see if there's anything else I want to look here. No. Sales. Yeah, so you're not, okay, so 2019, sales were down 4.5% or 4.3%. 2020, they're expected 5% growth. But I mean, you're not looking at a lot of growth. But you are looking at trade good valuation, and price to sales at 0.3. All right, EV to EBITDA, like 5.4, like next 12 months, 5.7, or this year 5.4, next year 5.6. Price to earnings, this is like cheap, like 5 times earnings, 5 times next year earnings is cheap. This is saying that it takes you 5 years to earn back, assuming everything is constant, it takes you 5 years to earn back the amount you invest in. Pretty much what's what you're saying. It's cheap. I prefer a little bit more growth. I think there has been a little bit of growth because I was just looking at their website. it's good to always find information on the website, on company websites. Like I'm looking at, sorry, not this one, sorry. Events and presentation. Let's look at this one. So this is pretty recent, November 20th, so about 10 days ago or 12 days ago. Like I usually just go over the presentation and just see the business, what they do. They're always usually make it look really nice and good, but just challenge yourself to see like, well, what if like, is there competitors? You know, what's driving their growth if they're saying that they're growing at 20% or 30%. So that's what I usually do. Like yeah, you'll see that growth revenue. So they're saying they growing over the last 6 months, but I think it had to do with the health issue that we've been having. So it looks like it's driving some of the growth, and I think that's why we saw 5% growth for 2020 earlier. So I just gotta look through this. For me personally, I think it's an interesting retail play. It's cheap on a valuation basis, but for me, I probably want something a little bit more growth. So I probably would likely pass on this one. But King Kang, thanks for bringing that up. If anyone else is interested, feel free to just kind of follow and look through it. Yeah, ton of free cash flow. Yeah, they have great cash flow from operations, which free cash flow is just less than the capital expenditure, which didn't seem like a lot. So that's what I want to cover. So if you have companies you want me to cover in the future, again, I would be posting every the next couple of days. If you have any questions or companies you want me to cover, just post it there. I will take a look at some of them. Someone asked me about Microsoft. I mean, I did a video on Microsoft. I like Microsoft long term. I like Microsoft long term. They're growing at 10 to 12% annually and trading very reasonably. I did a video a while back and it was maybe $200 and something as well. $200 and something, and I said in that video like, if you like, I wasn't buying at that time. I because I think it was pretty like high or kind of went up a lot already. So, but I've been buying it back under $200. So when I dropped to $200, I've been buying. For long term, because I mean these are kind of stocks that you're not going to see grow 100% a year. I mean they're mega caps. They're not going to grow 100%, likely not at least. So these are longer term plays. I'm planning to hold these for the next decade. Like there's like I could tell you a few like mega caps are great for like the next decade. Like Microsoft, Amazon, Facebook. Facebook and Microsoft and Amazon are probably my larger positions. So that's kind of my core positions. And then I kind of have these like speculative plays where my SPACs is, and the next company I'll talk about. Let's see. I talked about Nio earlier. I don't know what's a good entry point. I mean, I wouldn't buy, if you're asking me, I wouldn't buy it now. If you ask me if it's down $30, down to $30, would I buy at $30? Yeah, I think I would buy a little bit at 30. I mean, I sold a lot already. So I would probably buy some back around $30. I don't know if we'll ever get there. But if you have really, really long term, you might wait for a little bit bigger pullback and then just pick up a little bit and just kind of average in your position. But I would, at these valuations, I wouldn't buy any Tesla, Nio, or XPEV right now. I'm happy just holding it. I won't be selling it because I want that exposure. But you already saw today, SPE down like 12% or whatever. Like these EV are getting hit pretty hard. Okay, so this one I'm very excited. I'll spend the next 15, 20 minutes on talking about this company that I have a lot of I'm very excited about. Again, this is a speculative play. So that company is Nanox. Okay, I'm gonna go to their website. Okay, so what Nanox does, they are a digital imaging company. So they do x-rays. So normally an x-ray equipment costs probably 1.3 million or so, I think. Okay, let's go through the website. Maybe that's the best way to go through it. So they are a company that allows x-rays to be done at a cheaper cost. That could be a lot cheaper cost, because so one of the biggest issue they said right here, is, according to World Health Organization, 2/3 of world's population have no access to medical imaging systems. Many others suffer from weeks and months for wait time to assess these systems and diagnostic results. So it's really difficult in some countries for people to even get an x-ray. So an x-ray, because it's very expensive, and early detection through medical imaging may potentially save millions of lives annually for cancer patients alone. So they're saying how important x-ray really is in the world. But the issue is, with 1.3 million price tag, at the top range, I guess, a timely preventive screen for patients is really difficult. So what they're doing is trying to solve that problem. Our technology changes that. They're introducing something called Nanox ARC. So what you see here. So basically the idea of this is be able to easily scan someone. I think this hula hoop or whatever you call it, kind of moves around to scan. I'll tell you the story a little bit later. Just tell you a little about the company right now. So their idea is to make this cheap way of taking digital imaging or x-rays. So there's just comparison with like Nanox source versus like the other x-rays. So they're aiming to deploy 15,000 of these systems globally in the near term. I believe what they said in their S1 or F1 filing is by 2024, I think. I don't know if you guys ever heard of this company. Okay, so why do I really like it? So I looked at their filing, so I may just go there. Do I have it up already? Yeah, okay. Okay, so this is their filing. So when they wanted to go public, this is recent IPO. They have to file these in America or US. They call it S1s, but I think this is a foreign company, so they filed F1. So it's just really their prospectus on going public. So this is about, I don't know, 160 pages long. I've kind of went through, I guess, most of it, or tried to. It's very interesting. They talk about the technology, the issues, and a few things I want to highlight, okay? So what I really like about it is their business model, okay? So like I said, like, it costs like regular price or like a higher end digital imaging of devices of 1.3 million. But they're able to make these between $8,000 and $14,000. But that's not, but they're using a different technology. So I think they talk a lot of the technical terms. But before, I think the normal x-rays, what we're used to is they burn this filament like a very high temperature. So it took a lot of cost to create something that cools it. But now they're actually removing or not using it. I don't really understand technically like what it is doing, but if you're interested, you could read it. Like I read it, but I just not exactly sure understood. But essentially, it's just a cheaper way of making this, digital imaging. And their technology actually came from Sony when Sony was using this technology for their TVs previously. And I guess they were no longer using this technology, and it was bought by who, and they further developed this technology into using it for digital imaging. And like I said, what's really interesting is, let me look for 8,000. I forgot what page this is. Yeah, right here it says, we currently estimate the aggregate cost of purchasing assembly components of this Nanox ARC will be approximately $8,000 to $12,000 per unit. You're comparing $8,000 to $12,000 per unit versus something about $1 million, which is significantly cheaper. And not only that, I love their business model. So in the business model, they say, I think a little bit lower. So what they do is because it's so cheap, they're gonna give this digital device, or they're giving this device for free or at a low cost. I think right here. So they've already entered an agreement for medical scanning as a service agreements to deploy 4,500 Nanox systems in 11 regions. See, so what they'll do is they will. Okay, so they will provide a minimum of scans per. Okay, where did I see it? But basically, they're gonna give away at a low cost or the system for free, and what they will charge is a price per scan. So instead of buying it for clinics or where hospitals or where they need the system, they are charging amount per scan, and it says $14 per scan. So if you take let's say, I don't know, $14,000 at the higher end of what they calculated, a mass production though, this is mass production, divided by $14 per scan, you're talking about 1,000 scans, and you already make back your cost. So, and they have minimum number of scans by these agreements. So they already paid back that, I forgot where it does say number of scans. I don't know the minimum scans, but I believe I read that there is a limited number of scans they have to, per agreement, they have to have scans. So they literally make back their money very quickly. At $14 scan, you only make 1,000 scan. And if you're talking about, I don't know, I forgot where I read it, but they literally, I think I calculated, it worked out to like 4 months, you would pay back the system. And then every scan after that is pure profit, pretty much. Like, that's why I really like the scan, the business model of scan, price per scan is way better than buying out a system, because you're going to be earning recurring revenue every year as they use the scanner or the equipment or system. So one, that it's really cheap to do, and they love their business model of charging price per scan. So let's look at the stock price and what happened. Okay. One month chart looks really good, but okay, so they started trading around like August, okay, and then a huge jump. They're going up great, and you see from 64, it dropped to like, I think even the 20s. Yeah. So what happened was a short report came out. Citron came out with a short report, and they're saying, now I read through the short report, and I think I agree with some of the points, and some of the points I didn't really agree. So one of the things they said was where we saw, where was it? So they did a research, and they said like these aren't real companies. They're saying this is all fake. They're saying, literally say Nanox is fake. I don't know if it's true, but I mean, how can it be fake? I mean, those, oh yeah, I forgot to say, they're also backed by like, who else they were backed by? They were backed by Foxconn and SLK, is that the Korean big company? Is it SLK? No. Or SK Telecom, SKT. So they're big, apparently they're like AT&T of Korea. So they're backed by Foxconn and an equivalent of AT&T in Korea. So I don't know. I mean, they also, like, this going public, you have to go through a lot of scrutiny. I mean, I don't think they would be able to go through it if these are all fake information. That's why I say it's really high risk. Because if they're able to do it, like this will earn you significantly, or this will like make you lose a lot. So again, you have to manage your positions and be comfortable with what you're willing to lose, I guess. Yeah, so that was one of the things they said. The customers were fake. I actually kind of searched up some of the customers. I wasn't able to find some of them. Let me go back there. This list right here. I went through some of it. I was able to find some, and I wasn't able to find some. But anyways, I mean, I would believe it just because I assume these numbers are these would be been audited. Also, one of the other things they said was they only spent about 21 million for R&D or something. I don't know how accurate that is. I think I did see the number in here, but we don't know how much was spent before by Sony, right? When they were developing this technology. I don't know how advanced it was before then as well. So, but I think I like this company because I love what they're trying to accomplish and what could be very disruptive. If they're going to able to make something that normally costs 1.3 million or $1 million to something that's only 15,000, incredible. And they're so I don't know how far they're ahead. I don't know. I looked into competitors like Philips or GE. Would they be able to come up with something like this? I mean, they may be able to. I don't know how long it would take them, and what else they're going to do with their current systems, right? So, and would they be doing that? Maybe. How long or can they? I'm not sure. There's another risk with this company is the FDA approval process. And actually, before I go to that, I'm sorry, I'm going all over the place. So that was the short report, and that's why the stock kind of came down crazy. And then the company came out on about October 1st. You see this jump. So the company was like, all right, we're gonna show. You're saying, oh yeah, one of the short report also said, oh, those are fake. There's no such thing as Nanox ARC. There's no actual device or system. They're like made up. So the company came out and say, hey, we're gonna do a live demonstration on December 3rd at this event. I think it says right here. Hold on. Yeah, the RSNA Radiological Society in North America. So they're gonna be at this conference, RSNA conference, on December 3rd at 10:30 CST time. So after that came out, you see the stock price. So we'll show you, we're live demonstration that, and it jumped up. Sorry, let's make sure. Yeah, so it jumped up and it kind of traded. And as the time gets closer to the December 3rd, you can see the run up. It's crazy. Over 100% in about a month. So I'm not sure when you should buy in. I mean, like, I got in a while ago. I think there could be volatility in this company. I think it could go either way. This could be something like buy the rumor, sell the news, and then once the December 3rd live event happens, it might jump and then it might come back down. Like, I wouldn't be chasing it. Again, this is really, really risky. It's a very speculative play. I think it's a very interesting one. I just like what they're doing, what they're trying to do. I really hope they could do what they're trying to do, because if they could, it'd be like incredible for a lot of countries who cannot afford those bigger and more expensive X-ray imaging machines. And this will be very disruptive if they could do what they're doing. They also have like software as a service as well with the system. It's all on the it's on the F1 filing. But now, like, let's go back to the F1. So, like, how do you evaluate this, right? So the way I look at it is assuming these numbers are correct and true. They said they're gonna issue like 15,000. So I'm taking like let's say round this to 5,000, okay? And they will generate about 163 million annual fee, okay? So if they're gonna say, they said they wanna distribute 15,000 by end of 2024. So I would assume I would just take this times by 3. So 163 times 3, you're talking about around $500 million of recurring revenue in 2024. And what multiple do you put on that? Let's go back here. So you're talking about Nanox, 500 million in 2024. Now, do we want to apply the same valuation? This is maybe not a good valuation. Let's look at Tesla. Okay, let's look at Tesla's valuation. They're both disruptive company, right? So if we look at the price to sales, it's about 20. If we take that, multiply by 20, you're talking about 10 billion valuation. So $10 billion valuation, but what does it trade at right now? Let's look at it. It trades at about 2.7 billion. Like, if you believe in the numbers that they're showing, and assuming they had hit 500 million in recurring revenue on 2024, I think they should trade about, I mean, applying Tesla's multiple, I mean, it is high. Maybe not. Like, I mean, it depends on what you want to apply. Like, if you don't apply 20, 15, or whatever it is, even let's say 10, you would expect it to be a $5 billion company in 2024, which is about 4 years from now. And they're trading at 2.7, so about 2 times the value in 2024. But if you believe in, like, if they should get the same multiple as Tesla, you're saying 10 billion. Like, I don't know what number like this will be, but I do think that if they could do what they can do and said that they would be able to do and get through, oh yeah, I forgot to say, the FDA approval, that's one of the biggest hurdle. In order to sell it in the US, they have to go through FDA approval. And I believe they filed it and they got some comments back and they've responded. Now, I believe they said they're expecting to hear back from the FDA in Q1 of 2021. If they get through the FDA approval, this stock can go up a lot. Now, will they get through it? Like, it's hard to say, but the management believes that they would be able to. I guess all management would expect that. But 1 second. Okay, so I'm not very familiar with the process, but it sounds like there's three classes, class 1, 2, and 3. The easiest is class 1 to get a FDA approval, class 2 is a little bit harder, and class 3 is really hard. So they filed, Nanox filed class 2, which is this in the middle tier, I guess. So if they could get through this, would be great. If not, they would have to file under class 3, which would be more difficult, more rigid, like more through testing and more difficult. Because they even said requiring what does it say? 1 second. Yeah, it's just pretty much a more difficult process if they cannot get through FDA class 2. I hope they would. So there's that risk. If they don't get FDA approval like this, they don't sell any devices. Although this is only US, so I'm not really sure what happens to the other ones. They should still be able to sell the other ones, but the other countries, when we saw the list of customers. So very highly speculative. If you believe in them, if they could do what they're saying they would do, and it could be very disruptive, and I could see this stock going up a lot. I do have a position in this I bought recently. I'm planning I bought only about a third. So what I might plan is to buy a third right now. Well, this is before, but maybe you want to wait if you want to get in, and then buy a third after FDA approval, but then buy the other third once they start delivering. Highly speculative, but if they get through FDA approval, I think that's the biggest hurdle. And we'll find out and how the live show does at December 3rd. So that's that speculative play I recently got into that I really, really like. I love their business model, love what they're doing. Very small company, 2.7 billion. If it goes to 10 billion, this could be 4 times almost in a few years. Highly speculative, highly disruptive if they could do it. I really like it, but again, manage your risk, manage your position size. Let's see if there's any questions. Sorry, this is my first live show, so hopefully it's still going okay. Let's see. Yeah, I think that's it. Thank you so much, you guys, for staying here, whoever's still here. How do I do this? Okay, so that was it. That's my first live show. It's been about an hour and 15 minutes. Hope you guys enjoyed it. Again, I will be posting not next week, in the next couple of days. So make sure you check out my posts, and if you have any questions or comments, or if there's any other companies you want me to cover and look into, please do leave it in the post. And thank you those who've stayed here, and What else? If you haven't yet, please give me a thumbs up. It really helps with the algorithm. I hope to improve as I the interaction or improve on my streaming. Again, first time. Hope it's not bad. And this is the kind of things I do on a daily basis in terms of my own hobby and my own time. I love looking at companies. It's kind of good, when you saw, for example, Nio, buying at $7 and going to $50. Like what? It's exciting. Although I didn't really expect it to go up to $50. I mean, if I knew, I would have put my life savings, but you never know, right? I mean, so invest with, managing your risk, like being whatever you're able to manage, and just kind of like manage your risk properly. Thank you so much. What else? Just, yeah, I think that's it. Until then, happy investing. Check out Justin at a couple of cents. He is amazing. I've watched his live shows every Thursdays. Again, thank you so much. And until then, see you guys next time.